Well, that's right. As we enter a whole new day in trade, let's take a look at the global cues from last night. Now, the US benchmark 10-year Treasury yield spiked yesterday to the highest we've seen since February 20, stood at 1.3276% by the end of session. So that's a bit of a concern. Of course, we know Treasury yields and equities tend to perform in opposite directions. So that's just a bit of a red flag today, and Dow futures took a bit of a negative dip this morning as well. But however, yesterday the Dow did close at a record high for its 8th straight record this year. S&P and Nasdaq were a bit under pressure. S&P fell nearly 0.07% and Nasdaq dipped 0.34%. Apple shares had a negative impact as they fell 1.6%. Elon Musk's SpaceX has raised $850 million, taking the valuation of that company to $74 billion. And as of this morning, all the futures are slightly dipping in the red. So that's a US update for you. Asia, of course, limited cues. China still on holiday, but Japan slipped in early trade with the Nikkei and the Topix both down. The Nikkei was down 0.76 and the Topix was down 0.20. This is despite exports rising 6.4% YOY for Japan. Korea, South Korean Kospi fell 0.94, so nearly a whole percent. And Australian S&P ASX 200 also fell 0.44%. European markets closed mixed on Tuesday. GDP fell less than expected, but no one really seemed to pay too much attention to that. Shares of Technifip FMC soared 41% to lead the Stock 600 on their first day in Paris. The Stock 600 ended the session, however, slightly below the flat line. So that was the market update for you. Oil prices rose on Tuesday because of the cold front in America right now continuing to hurt oil wells and refineries in Texas. But Brent crude slid. So there was a divergence. Brent crude slid while WTI went up. So Brent crude was down 22 cents to $63. WTI futures gained 54 cents to stay above $60. So WTI looking quite firm. That's the US benchmark. Globally, Brent softening a little bit, but let's remember again, we're seeing prices that are at a 12-month high and they've rallied tremendously over the last 3 months. Gold prices fell 1.7%, again on the back of a much stronger US Treasury yield, no longer serving its purpose as a hedge to inflation and a safe haven asset. Even when the Treasury yields goes up, gold prices tend to also take it a little bit on the chin. So spot gold fell 1.2% to 1796.50. So breached 1800 firmly. We're below there by around $3.50. And US gold futures settled down 1.3% to 1799. So futures slightly better than the cash market, but nonetheless breached 1800. And those were the global cues this morning.